Hey everyone. So today we're going to talk about 0 days to expiration options and why I think these options are not good for you as a trader. Well, let's dive into this. And what's the appeal of these options? Well, you can make a big profit in one day, right? By guessing early in the morning and then closing out by the end of the day. Does it sound easy? Well, hold on, my friend. That's when everything becomes tricky. As you well know, anything can happen during the day with the stock market. You know what I love about Wall Street? They always come up with these crazy products that excites the traders, especially the retail traders, to trade on things that most likely you will lose. So, in my opinion, 0 DTE options are losers. And why do I think they're losers? Well, let me give you a couple of reasons. Number one, this is gambling. There's no way you're going to be able to guess what's going to happen during the day when the market opens to the market closes. So there's really no strategy involved. So you're basically 50% you could be right and 50% of the time you could be wrong. So if you do this in and out every day, there's really no point. And the second problem I have with this is that most of the times the option premiums are very little. So if you're selling options, which is generally, I assume, is the strategy for these 0 DTE options, it's so little that it's not worth the risk. And these are two big reasons why you shouldn't trade them. It's a waste of time to me and also a waste of your capital concentrating on trying to make money on this on a day-to-day basis. And I know there's been a lot of hype in the media regarding these options and the benefits of trading these options. But let me tell you, the best thing is to buy a really good company with a lot of cash and holding on to it, and you'll reap the rewards at the end. And believe it or not, there is already a ETF that trades these 0 DTE options so that you can participate while you trading it yourself. And this is a huge red flag to me. A product that hasn't been tested yet, it's already an ETF out there trading it. So my advice, do not even touch it. So you might be wondering who offers these 0 DTE options. I'm not aware of any stocks that offers them as of today, but ETF such as the SPY and QQQ offers it. And the indexes such as the XPX, which is the S&P 500, the NDX, the NASDAQ 100, DJI, which is the Dow Jones Industrial, IWM, which is the Russell 2000, and VIX Index offers these 0-day options. Like I said before, I don't think it's worth trading these options, but let's listen to a couple of people and see what they have to say.
You know, the catch, as always, if you are selling put options, you're selling a form of insurance on the market. So if volatility spikes, you're going to have some risk there. There's something else, too, which I think is kind of important to think about, which is when you sell very short-dated options, you're subject to what we call path dependency, which is how the market behaves from one day to the next. If I sell an option that expires in 1 month and the market ends up at or above that strike, I'm going to make my money. However, if I start selling at-the-money options every day, I can actually dig myself a hole that I need to then dig my way back out of. So even if the market ends up higher, if it took a really bumpy ride to get there, this might not work out.
You know, they said it's been vol dampening, but if there's ever a reason for volatility to come back into the market, you know, I don't know how these things are going to perform.
Well, the expression is picking up nickels in front of a steamroller. Mm-hmm. I mean, the risk reward on it, I don't think makes a lot of sense.
Paid enough to take that, in my opinion. The market is not paying you enough to take type of risk that you're putting on. You probably don't even.
I think the only way I would play this is if I already own 100 shares of an ETF and I just want to collect some premium for that one day. What I would do is sell a call. Essentially doing a cover call for that one day. Therefore, the risk won't be so bad. But even then, if the market spikes up for whatever reason, you will lose out on the equity gain of that ETF. Alright, so let's say again, forget about these 0 DTE options. Your best bet is to buy a good company, hold it for long term, and reap the rewards at the end. And if you want to collect premium, sure, you can do that. But just go into with a cover call strategy where you're holding the shares of the stock and you're selling premium. So that way you get the equity increase. And if you do sell premium, make sure you go out, like a month ahead. If you want to do weekly, you can do that, but something a little more long-term than 1 day. It just doesn't make sense. Well, hopefully you enjoyed this video. And if you do, please smash that like button, subscribe to this channel. And if you have some opinions or comments, please do so and leave it below. And until next time, happy investing and take care.